Hi, my name's Phil. I like talking about politics, and in this video, as the economic figures for the summer months are revised downwards, I'd like to discuss what could potentially happen with the political narrative next year, and if Labour wouldn't have been better just cancelling the Tory tax cuts from earlier this year. In other words, did Labour actually fall into the Tory trap set for them unnecessarily? But first, for daily political commentary, please hit the subscribe button so you don't miss out. So, news out today was that the UK saw zero growth between July and September. It had been reckoned at 0.1%, which was pathetic enough, but now revised down to 0%. Now, of course, although Labour were in power for most of that time, this you can't really pin on them. It was long before they announced their first budget. So when Conservatives earlier this year, do you remember when they were complaining about Sunak making a mistake in calling the election for July, say, well, why did you wait for after summer? We'd have had this better economic news. Right, they were just exposing their stupidity. They thought the economic news was going to be good and that Labour would benefit from those figures. But as I said at the time, the evidence was that the economic figures were going to be poor and their Rwanda scheme would have been exposed as a complete dud. If you can believe it, it's actually possible that the Tories would have taken an even more savage beating had they left the election until autumn, as many thought was going to happen. But although zero growth across an entire quarter is bad news, and I really don't know whether most people will realise that these figures are basically on the Tories, because Labour hadn't actually done anything at this point, the major hazard will be the economic figures between October and next March. The fact of the matter is, the economy is in a state. Labour have been saying it often enough and the public know it. They also know that Labour can't turn it around overnight. However, it is also possible that a lot of voters think that at the very least things shouldn't get worse. The Tory media have been pushing the line that Labour's budget will wreck the economy. So every time they can report on bad economic news, they get to add credibility to that line. But of course, if in a few years' time the economy is in much better shape, Labour will be able to say, look, well, we had to go through these tough times to get to better pastures, and here they are. So it'll all work out and the public will be happy enough. After all, the Tories kept getting away with talking about green shoots of recovery, which never really materialised, but they still kept winning elections. So, of course, Labour will be fine as long as people actually do feel better off before the next election. The problem is that the economic news next year is not necessarily going to be just a hangover from the Tory government that the media will spin to be Labour's fault. The budget announced at the end of October, of course, did impact things. It did good things. It raised the level of investment in key areas such as healthcare, housing, defence and energy. It balanced the books, as Labour promised to do in the manifesto. But the decision to raise employers' national insurance contributions does have an impact on business confidence. We knew that some businesses put their investment decisions on hold ahead of the budget, which is why October's figures are not great, and then abandoned some of that investment when the budget was announced as a result of that one tax. And because the news is full of worries about business confidence, especially when it comes to hiring, that has a knock-on effect in the form of poor consumer confidence, especially when the media are laying things on thick. You know, I said recently how the December advertising rates on my channel is proportionally lower than I've ever seen it by far. Like, really quickly, to avoid repeating myself, there's like an ebb and flow of advertising rates, which YouTubers can see in our analytics, but it applies across all advertising, broadcast media and everything. The rate ramps up in the last few months of the year because the lead up to Christmas has a series of huge consumer events and people are spending a lot of money. So, of course, it makes sense that that's when retailers blow most of their advertising budgets. Then partway into January, after the sales, the advertising rate basically crashes through the floor because people aren't spending as much, except maybe on like gym memberships that they're never going to use. So December's rate is pretty high, way above the annual average. But right now, my December rate is not just below the annual average, way below it. It's even below the January rate. Like, I've never seen this in 10 years of monetizing YouTube content. And it's a very bad sign for the retail figures for December when they are announced in February. Basically, I think there's a good chance that this final quarter ends up as contraction. Now, I suppose mathematically speaking, if the third quarter figures have been revised down, that helps. That worry maybe becomes less likely. The Bank of England are expecting zero growth for this final quarter. which you would take as a win right now because zero growth is not contraction. And yet the GDP figures keep being revised downwards. Like we've just had the third quarter figures revised downwards. The second quarter figures were also revised downwards, which was, of course, when the Tories were in power. And we've had a habit, I've noticed over the past couple of years at least, of economists overestimating UK growth. Not by loads, but when the economy is already flat. Like, if you predict 4% growth and you get 3.8% growth, like no one's going to quibble. But if you're predicting 0.1% growth and you get minus 0.1% growth, there's difference there. You've got a rate that's already flat. It doesn't take much for technical growth to become technical contraction. And there are two big fears for Labour here. The first, of course, is recession. It's a terrible word. If this third quarter ends up in contraction, then the first quarter of 2025 contracts, then that's recession. And the media headlines will be brutal, savage. And given that Labour's communications are utterly woeful, there's every chance that they make an arse of dealing with the news, just like they've messed up the media game so far on basically everything. But if the media can't use that word, recession, if it ends up basically being flat, or let's say we have contraction in the third quarter, but it's flat or like 0.1 growth in the first quarter of next year, the news will bite less, right? Bad economic news does hit consumer confidence, which is bad, but the problem will be contained as long as we don't enter recession, no matter how shallow or short. I mean, the media downplayed it when the Tories did. They will not be Labour. But there's a longer term worry as well. Right now, the longer term forecast for the economy is still quite anemic. Labour insists that the forecasts are not taking into account various things that they're doing to stimulate growth, such as planning reforms, moves to get better deals with the EU, for example. And this is true. Those producing forecasts confirm that, we can't include those factors in our models because we do not know the details. So there is a chink of light at the end of the tunnel. Like, if Labour's plans work out, we are going to be getting extra sources of growth, which are not being factored into the calculations. And there's something else as well. The higher employers' national insurance contributions, that is causing some businesses to put on hold hiring plans, as well as suppress wage increases. This, in isolation, is obviously bad news. However, the public sector are desperately short of workers, and the nationalised part of it are hiring. So depending on the geography, moves to reduce the number of workers needed in the private sector actually just helps them move to the public sector, boosting public services and still largely maintaining employment rates. But that is just one possible outcome. Another is that Labour's planning reforms don't have as much impact as they're expecting, or that those losing work in the private sector don't move to the public sector, possibly because their skills don't quite match up in the vacancies in their area, and that they don't get the deals with the EU they're hoping for, because at the moment they're flailing a little bit on that. In other words, that chink of light at the end of the tunnel could be a train coming in the opposite direction. Basically, I'm looking at the economic news as well as the rooms in my own analytics, and I'm thinking, this is going to get worse before it gets better. And there's no guarantee that it gets good enough, because this rise in employers' national insurance is not a short-term economic hit. And I can't help thinking, did Labour get this right? Because there was an alternative. Like, they couldn't just not raise the extra money, right? But there was an alternative. The reason they raised employers' national insurance is because the Tories cut employees' national insurance twice at the start of the year. It was always intended as a trap to blow a hole in Labour's spending plans. But polling from the time showed that the clear majority of voters didn't want the tax cuts. In fact, they'd have accepted tax rises in return for more public investment. Should Labour have said that they would reverse the Tory tax cuts, which they could have described quite truthfully as unaffordable, but that they wouldn't raise national insurance above that level, like they needed in the manifesto to say, because the Tories will say, oh, they're going to raise your taxes sky high. So they had to be able to assure voters, no, we're not going to raise your taxes. So that's why the emphasis was on not raising the taxes on working people. But what if they'd have just said, look, we're gonna set the three big taxes of national insurance, income tax, and VAT at the rates they were at the start of 2024, and we will not increase it above that level for the duration of the Parliament. That would have dealt with the tax problem. There would have been no need to raise employers' national insurance. So there would be no extra cost for businesses. The economy would still be buggered, but this latest wave of low business and consumer confidence could have been avoided. Did Labour take the line they did because they had clear internal polling evidence which said they couldn't risk reversing the tax cuts, which is possible? Or did they just act out of fear and painted themselves into a corner as a result? Because if the worst happens with the economic news in, say, the first half of next year, and Labour fail to contain the narrative while they're waiting for their investments to come to fruition, I'm going to be increasingly thinking they done goofed by not just avoiding the Tory tax trap, by just saying, let's just reverse it, but not put it above that level. I mean, based on the polling we have publicly available, there is every chance voters would have approved of that move. We can't be certain because the public polling isn't that detailed, but it is possible. But there we are. Those are my thoughts. Let me know yours in the comments below. If you've enjoyed the video, please click the like button and subscribe for further content. If you'd like to support the channel further, you can click the join button for memberships. Thanks for listening, and until next time, I'll see you later.